I can promise you this is the most simplest price action strategy you will ever learn. It's called 2CT. How does it work? Well, it's based on the belief that a candle will close bullish or bearish at some point today. It is also based on the belief that every candle has a range. And the final belief is that the entry techniques I'm going to share with you are universal. Let's jump on the charts. If you look at this daily time frame, the belief that a candle has to close bullish or bearish is illustrated every single day. There's nowhere on this chart can we see a candle that hasn't closed bullish or bearish. Now, granted, some of the ranges of the candles have closed more bearish than others, and some bullish candles have closed more bullish than others. But without a shadow of a doubt, every candle has to close bullish or bearish. Now, why does this matter when it comes to the 2CT concept? Well, simply because every candle has a range. So if we take this daily candle, for example, you can see that price has moved around 68 pips. If we take this bullish candle, you can see that price has moved a range of about 62 pips. So as an example here, if I trade with a 10 pip stop loss, and this is a 68 pip range candle, I need 10 pips for my stop loss. And if I'm going for a 2R target, which is 20 pips, then I have enough range. If I trade with a 15 pip stop loss and I have a 62 pip range daily candle here, and I go for 1 to 3, I need 15 pips for my stop loss and 45 pips for my target. We clearly have enough range. Now, why does this matter? Well, more often than not, when a candle closes bearish, price follows through with a continuation with another bearish candle. And when a candle closed bullish, more often than not, a candle will follow through with another bullish candle. In this instance, bullish. But the question is, how do we take advantage of this? Well, we need to manipulate price action on the lower time frames by using scaling down techniques. And I'm going to share with you 3 entry methods that you can consider to incorporate into your trading yourself. So let's take a look at Aussie dollar USD as an example here. And I'm going to use some very recent price action just to show you that we've not gone back to look for any perfect examples here. The first one we're going to look at is this bearish candle. Okay, you can see here that this candle has closed bearish based on a simple idea that once a candle closes bearish, the next candle will be bearish. We can follow this price action through. So this candle is the 7 till 8 candle. So we'll start in price action in and around this area here, which is 7 o'clock. And then this candle closes at 8 o'clock, which is over here. This is the close. Okay. Now, if we take a look at this and we keep it as simple as the previous candle closed bearish and the next candle will be bearish, can we take this trade? Well, the answer is correct. What we're looking for here is for price, so the new candle to open. So let's open the new candle if it's not already open. Okay, it is open. So this is the new candle. It has opened. It has created a top wick. Now, bear in mind, every candle creates a top wick, flips bearish, continues bearish, or creates a bottom wick, flips bullish, and continues bullish. So we're looking for sells now because the previous candle was closed bearish, and we're looking for price to continue down. Now, what we're looking for the second step is for price to break a structural low. Now, once price has created a top wick and there's a structural low to trade, then we can look for an opportunity. Let's call this 3 pips. Now, I always want to go for a positive risk to reward. So I'm looking for 1 to 2 risk to reward ratio in this scenario here. And let's see what happens. So now we're triggered into the trade and price continues in our direction. And the idea here now, guys, remember we're looking at this current candle is currently bullish, but in a replay mode, it went bearish first. So now we have a bearish candle close. We're anticipating this candle to continue bearish and then hope for the TP. We're not going to do any management. Now we lose this trade. Now, I don't want to get too specific, but in terms of winning and losing here, but what I want to point out is this, and it's very important you understand because I'm going to share 3 entry techniques with you, is this really a favorable trade? Well, based on the 2CT, the previous candle closed bearish. We anticipate the next candle to go bearish. It's created a top wick and it's flipped bearish on the break of the low. But what is the small nuances here that we can identify? Well, look here. Price was pushing bearish, made a lower high. It continued bearish. We can call this the lower high. It failed to continue bearish, which is fine. We could always come back for a double top up here or something. And then look what happened before the close of the candle. It broke the lower high, invalidating the downtrend. So now the structure on the 1 minute time frame has shifted from being bearish to inferior depletion of that bearish sentiment, and now potentially shifting bullish. So as important as it is to understand that the previous candle closed bearish, we expect the next candle to go bearish, the patterns and the entry method you use on the lower time frames are equally, if not more important. Because the small nuance here is this, that if price was going to continue down, then we respect this lower high, we come back for a double top, or we make a lower high and continue down, and none of that happened. We invalidated this trade idea by the fact that it broke the lower high and now is shifting more bullish than it is bearish. Keep that in mind. Okay, so we have an invalidation of this short-term downtrend, lower high formation that then shifts bullish and now turns the pattern from being a bearish pattern to a bullish pattern. Let's look at a second example. Here we are looking at pound JPY. Again, another example that I wanted to share with you from today. You can see here on the structure on the hourly time frame, this current candle has closed bullish. So we anticipate price to continue bullish. So based on that theory, this is the 6 till 7 candle, and this is where this candle in theory closes. Let's go one forward. This is where the candle closes. Okay. Now, what are we looking for? Well, we're looking for price to first create a bottom wick, because every candle creates a bottom wick and then flips bullish. So let's wait for that to happen. It did, as you can see here, a bottom wick, which is this wick on the 1 minute time frame, and then it continues bullish. So do we enter the trade here with our stop loss below here in anticipation for price to continue bullish? Well, let me share something with you. And this is actually a trade that we was going to take today on the London live session, and we didn't take, and I'm going to explain why. The trade did continue to push up based on the same theory. Now, what's important you understand is this. The theory is this candle closed bearish. We believe it to continue bearish. We took the trade and it lost. Okay. Here, this candle closed bullish and we anticipate it to go bullish. We took the trade and it won. The small nuance with Aussie dollar USD is that price created a lower high and went bearish, but in fact, the structure of the market had already shifted from being bearish to bullish, which invalidated the setup. Here on pound JPY, we have a bullish sentiment from a 1 minute perspective. However, what didn't form is what's very important before the entry is the higher low break of the high continuation. So we have two examples, but one closed bearish, one closed bullish, both went in the same direction as the previous candle closed. One pattern was invalidated because the structure on the 1 minute time frame changes, or any time frame, it doesn't matter, whatever your entry time frame is. And then on pound JPY, the trade was valid, but it didn't create the higher low, which invalidates the setup again. So there's some traders that will trade the setup and say it was great because the previous candle closed bearish and next candle will be bearish, but it's not great because it doesn't create consistency. So you want to avoid this. Pound JPY, you may have taken this trade because of the same idea. The previous candle closed bullish and you expect the next candle to go bullish, but it's not valid because it didn't create a higher low pattern, which is a natural development of a trend. Higher low, higher high, higher low, higher high. It did not create this. The reason you need this is so you can place your stop loss behind this structure, because in a trend, the market creates higher highs and higher lows, and you want to put your stop loss in a safe place. So what is a better setup? Well, let's take a look at Aussie dollar USD. Here you can see that the trend is clearly to the downside. There's no denying that. All right. Now, what we're looking at here is this candle closed. So the previous candle closed bearish. This is the 11 till 12 candle. So let's move this over here. This is where the candle closes, 11 till 12. Now, what are we waiting for? We are waiting for the new 1 hour candle to open to create a top wick. So now this is closed bearish. We anticipate this to go bearish. So what we're waiting for here is for price to create a top wick. Here we go. So now we not only have a downtrend, we have an illustration of price being bearish. We have a lower high formation. We have an area in the market where price can break below. We have the previous candle that has closed bearish in anticipation for the next candle to continue bearish. Is this a viable trade opportunity? Well, the answer is yes. Again, this is another setup that developed yesterday. Unfortunately, we just missed it by a fraction of a second, but I want to see if you guys can piece the puzzle together. Okay, let's go for a 1 to 2. Let's look for price to break the low here, and let's see what happens. And there you have it. Okay, now don't get me wrong, all 3 trade setups are very good, but there's small nuances that you have to understand, and this is the whole point here in sharing these entry methods with you. Not every trading opportunity is a pattern that you should be trading. You should be picking 2 to 3 setups that are A-class setups every single time and leaving everything else alone. This opportunity on Aussie dollar USD is clearly illustrating a downtrend. The previous candle closed bearish. The new candle opened, created a top wick, flipped bearish, broke a structural low to make a lower low. That is part of a natural development of a downtrend. Lower low, lower high, lower low, lower high. This is where we see the wick formed. This is where we want to enter the trade. This is the break in anticipation of a lower low. It's very clear. Everything lines up and the confluences are beautiful. Here, the setup was perfect. Previous candle closed bullish, anticipation of a new candle to go bullish, create a bottom wick, but flip bullish too soon because it did not create the structure that we need to see, which is a higher low before a higher high. Here, the setup was beautiful. The previous candle closed bearish. We anticipate the new candle to go bearish. And it did. It continued bearish. It created a top wick and flip bearish. However, the sentiment in terms of patterns on the 1 minute time frame had shifted. So it's very important to understand these 3 entry methods. You can trade them all if you wish, but just understand if you are not consistent, you're going to have constant fluctuations with your trading results. Anyway, let me know which trading entry method you like the most and you're finding the best results from in the comments down below. And until next time, guys, continue to trust the process.